Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Thursday. These are the stories that set your agenda. Stocks in Asia edge higher as investors turn their attention back to tech. We will bring you earnings from TSMC, the world's biggest contract chip maker, later this hour. President Trump declares the US and China are in a trade war, but the Treasury Secretary says the 90-day truce could be extended. Plus, budget black hole. The UK Chancellor warned she will need a £50 billion fiscal buffer for a better-than-evens chance of avoiding future tax rises and spending cuts. Before we get to the markets, breaking lines coming through on the earnings front, this time from the world's largest food company, Nscale, and the top line coming through in terms of organic revenue over 9 months, up 3.3%. A new CEO, of course, ahead this company. The stock is up a little over 3% year to date, around 3% year to date. And the focus will be on to what extent this is a business that's able to absorb those costs and pass them on to the consumer, and whether or not, indeed, there is a sustained return to growth. New CEO taking over, of course, in September, and there'll be a focus, particularly on the analyst call, as to what his priorities will be in the quarters ahead. This is the three-year picture when it comes to Nscale, down 29%. Let's get to the broader markets right now. That trade uncertainty is still there, of course. Mixed messages, quite frankly, from the US president and the Treasury Secretary when it comes to relationships with China. We know negotiations and talks, at least on some levels, are continuing as you lead up, of course, to that potential presidential meeting between Xi Jinping and President Trump. That hasn't been completely ruled out yet, despite the tensions between the two sides. European futures, then, after a decent session on Wednesday for European stocks, currently pointing lower by 0.4%. FTSE 100 futures here in the UK pointing lower by 27 points. S&P E-minis currently flat, modest gains of around 0.4% by the close yesterday for the S&P 500. Nasdaq 100 futures pointing up just 1 point. It seems like the US equity positioning is looking for the next catalyst. And certainly when it comes to Fed expectations, we can flip the board, because you have seen in the options markets increased bets on a 50 basis point cut at some point this year from the Federal Reserve. So the adjustments continue in terms of expectations around how far this Fed can go. 402 right now on the benchmark US 10-year. You haven't been able to break through that 4% level for a while. That seems to be a bit of a holding pattern in terms of the benchmark. Largely unmoved in the session today. Euro dollar at 116. A third straight day of dollar weakness, interestingly. So are the short positions on the dollar building out again? Is the call around weaker dollar back in focus? The single currency up 0.1%. Gold fresh record highs, now up 60% year to date, and above 4,200 and up 0.6% in the session today. That unrelenting move higher for gold continuing. Brent at $62 a barrel and 50 cents, up 0.9% in the session today. So oil higher. Trump saying that India has agreed to cut back on its purchases of Russian oil. Let's cross over right now to Hong Kong, where Winnie Su has a take on the Asian markets. Winnie.
Yeah, so it seems like it is this cautious optimism theme in Asia today. We see that overall stocks are up about 0.7%, and leading gains here is the Korean stocks rising to another record high, and that's driven by this local report saying that the country is close to getting a trade deal with the U.S., and that's pushing the exporters like the automakers higher. Yes, we are monitoring what's going on between the U.S. and China, but actually earnings, like you mentioned just now, Tom, is that key focus today as we are waiting for TSMC's earnings. TSMC here is up some 1.7%, and the overall Asia chip makers are also higher ahead of earnings. So right now, optimism is around the earnings to deliver a strong profit growth, especially on the back of the growth when it comes to AI and iPhone demand. Now, we take a look at what's going on in Australian stocks, actually up slightly slightly and also headed for its record close. And we are seeing a bit of a pressure when it comes to the Aussie dollar. And that's all coming on the back of this latest data showing that unemployment rate has actually jumped to a 4-year high. So it's adding feeling expectation for the central bank to cut rates as early as next month. So here, bucking the trend, we are seeing a rare earth actually trading lower, and that's after what you mentioned just now, how Bessent was proposing for a longer trade truce if China can back off from that rare earth control. And last but not least, we always take a look at what's going on in Japan. Again, rising for a second day as we are seeing that uncertainty around politics easing a little, with expectations now rising that Takaichi is likely going to become the next prime minister now that she has actually called for support from a Osaka-based opposition party. So with their meeting now scheduled for later today for them to discuss what the policy would look like and potentially forming a coalition government.
Uneasy, thank you very much indeed. In Hong Kong and on the latest when it comes, of course, to the politics of Japan. A story we'll continue to monitor for you as well. And it seems that the odds of Takaichi becoming Prime Minister have improved on some of those developments and, of course, the implications for the fiscal policy story out of Japan and what it means, of course, for the yen and Japanese equities as well. Meanwhile, President Donald Trump says the US is locked in a trade war with China. The president was asked if the two world's largest economies are in a sustained trade conflict.
Are we in for a sustained trade war with China?
Well, you're in one now. Look, we have 100% tariff. If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense.
Earlier, the Treasury Secretary Scott Bessent had suggested a longer tariff pause was possible to resolve that conflict over critical minerals.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps. But all that's going to be negotiated in the coming weeks.
Let's bring in Bloomberg's news desk editor Jill Deesis now for some more context on this. Jill, so frankly, mixed messages, it seems, coming from the Trump administration. Posturing from both sides continues. Where do we go from here?
Well, Tom, I think at this point, really what those Trump comments seem to be saying is, effectively, the U.S. and China have already been in a trade war, right? I don't know that that's necessarily sort of a new development here. I think what's more interesting is just sort of the posturing that you're really seeing as these two sides, the U.S. and China, try to develop this narrative ahead of this very highly anticipated Trump meeting with Xi Jinping that's expected to take place in Asia toward the end of this month. There seems to be some continued negotiations between these two sides on various issues as they try to hammer out some details ahead of that meeting. But I think, going back to those Bessent comments, what I think that's really telling us is that there continue to be issues that are at the heart of this issue. You're still trying to negotiate incredibly complex trade relationships between the world's two largest economies. The issue of rare earths in particular is just continues to be a sticking point between the U.S. and China. That's something that they had discussed when they met in Geneva earlier this summer. Obviously, with all of these sort of delays and sort of postponements, this truce that it seems to be unfolding within 90-day increments in this relationship, that continues to be an issue here. I think you're going to continue to see those negotiations leading up to this Trump-Xi meeting. Do we end up getting just another postponement out of that meeting where they continue to negotiate? I think we'll have to see, but really does kind of point to you, Tom, that this is an incredibly tricky issue for these two sides to resolve. Not sure that that necessarily goes away anytime soon.
Yeah, and to your point, the complexity increases, doesn't it, every time each side takes another measure and puts in place and implements another form of restriction. And you talk about this meeting between the two presidents. I wonder, as we look at the markets and a market view that seems to be becoming increasingly able to kind of look through these tensions, resilient to some of these trade tensions to some extent, whether or not, in fact, if we don't get that meeting, maybe that is the shock for these markets. Are we still on track for that meeting between the two leaders?
Well, Tom, yeah, I'd say that it's still appears that's going ahead. I do think that would be quite a bit of a shock if that was called off. Clearly these two sides continue to negotiate. That's something that we've heard from Bessent, from Jameson Greer, the U.S. Trade Representative. So, both of these parties really do have, a bit of a vested interest in at least getting their leaders together and having some kind of a meeting there. I think the question, though, is whether, some of these recent sort of tit-for-tat escalations in the trade war have any kind of an impact on that. Really, what China announced last week, those export curbs involving rare earths really going kind of quite a bit further, I think, than the U.S. was maybe anticipating after some earlier trade talks this summer when maybe they did think that they had reached some kind of an agreement with China over the ability for China to export rare earth materials with fairly limited curbs. I think that really was, a bit of a jolt there. And I think, you're seeing that a little bit in the reaction. You're seeing the U.S. announce some threats, Trump himself talking about increasing 100% tariffs on China, et cetera. So both sides seem to be showing the kind of leverage that they think they have as these trade negotiations go on. But at this point, it still seems like, we're getting a Trump-Xi meeting. Of course, that could change at any time, but we'll have to see. But at this point, it seems to be on track.
Okay, still on track, at least for now. Bloomberg's news desk editor, Jill Desis, thank you with the update in terms of US-China tensions, what we've been hearing, of course, from Scott Bessent and the president himself. And I talked about the fact that markets seem to be a little bit more immune to some of those trade tensions. It's worth noting, of course, that you did see some moves yesterday on Wall Street as a result of those comments by both Scott Bessent and President Trump when it comes to that relationship with China. So it's not to overlook that. Let's bring in Bloomberg's Valerie Teitel right now. In terms of that story, Val, is it fair to frame these markets as being a little bit more resilient to the trade tensions, the trade volatility, that they're starting to become a little bit used to this?
Look, yesterday we were essentially whipsawed on these headlines. A lot of volatility in the market yesterday as the broader S&P 500 index tries to make up that gap from Friday. Now, we tried desperately yesterday. We're up some 1.2% in yesterday's session, but it didn't hold over these worries, over these trade tensions, and we hit a low of near 0.5%. We ended up in the green, but yesterday's volatile session, I think, is just perhaps a sign of what to come. The market does feel nervous about what's coming out of the U.S. administration when it comes to their relationship with China and these negotiations that you guys just discussed. The market is also dealing, Tom, with a lack of data. Perhaps that's also what's driving this short-term volatility. We really just not know what to make of the U.S. economy at the moment. We did get the Fed's beige book, though, out last night after the close. It didn't really tell us any direction when it comes to what side of the Fed's dual mandate should they be acting on more. There was evidence in the report that employment did look stable, but there was still muted demand for labor. That's something that Jerome Powell has talked about. And the extent of the tariff pass-through was all over the place in the beige book last night. Some companies reporting holding prices steady, some reporting raising prices, others saying that the demand isn't strong enough, they've had to cut prices. So all over the board when it comes to tariff pass-through to CPI. And remember, we're very much in a blackout period when it comes to any new information on inflation. We have to wait till next Friday for that delayed BLS report. There was also evidence of resilience in the U.S. consumer, but just on the more wealthier end of the spectrum, and some evidence that the lower income consumers aren't doing as well. Now, taking all this together, given the fact that we don't have we have a lack of data and this volatility happening around these U.S.-China tensions, it's very interesting that in yesterday's session we saw the VIX curve inverting. Now, Tom, this can be taken as a manner of different ways. Some say that this is a sign of caution, that near-term volatility is coming for markets. Others say this is just a flush out of speculative excess that has been in the market since we've had a low volatility regime since mid-August.
Bloomberg's Valerie Teitel, thank you very much indeed. Let's mark what else should be on your agenda today. 7 a.m. UK time, we're going to get monthly UK GDP, so we'll break that for you, of course, in about 45 minutes' time, as we start to see a pickup in unemployment and certainly a sense from the Bank of England Governor Andrew Bailey. He's becoming more concerned about the labour market as well. And, of course, you've seen money moving into gilts as well. So some investors at least starting to price in more cuts from the BOE. We'll see what the GDP data does to that story at 7 a.m. At 10 a.m, then 3 hours later, we're going to get euro area trade data, building out a picture in terms of the health of the euro area, of course, on the trading front at a time, and then have that trade deal with the US at 15%. So we'll get that detail for you as well. And at 2 p.m, Fed speakers, including Chris Waller, will be alongside Myron and Barb in a conversation with Bloomberg's Tom Keene. So we will bring you that, of course, as well, at a time when we have little data to go on, and there are increased bets in the options markets around a potential 50 basis point cut from the Fed. We'll see what Chris Waller and others have to say. Chris Waller, of course, in conversation with Bloomberg's Tom Keene. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go, DAYB Go, on the terminal. Coming up, the UK Chancellor warned that she needs to raise her fiscal buffer fivefold, if she is to avoid tax rises and spending cuts in future years. That's beyond, of course, the budget in November. The details on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To the UK now, where the Institute for Fiscal Studies says Chancellor Rachel Reeves needs to raise her fiscal buffer fivefold to have a better than even chance of avoiding more tax rises and spending cuts in the coming years. Bloomberg's Lizzie Burden joins me now for the details. Lizzie, this is a question, you've put this question to the Chancellor before, why she's given herself and why she gave herself such small fiscal headroom, and now the IFS is underscoring just how much that needs to be expanded in the years ahead. What are the consequences if she doesn't do this?
I'm glad you remember that, Tom. Look, of course, we've had two fiscal events so far this government, the last autumn budget and the spring statement, and at both, the Chancellor left herself a razor-thin margin of £9.9 billion. And because the UK is so exposed to the kindness of strangers, the international bond market, that headroom has been almost instantly wiped out both times. And that's prompted speculation all the way to the next fiscal event about what tax rises and spending cuts would be coming next time. And that, in turn, has hurt growth on top of the tax rises themselves. So today we're going to get the latest UK GDP figures, as you were mentioning, at 7 a.m. London time. And the expectation is that they're just going to tick up from 0% to 0.1%. So it's hovering around stagnation, and that reflects the self-induced choices, the difficulties here in the UK, not just the global instability as well. Now, the Institute for Fiscal Studies, as you say, like many other economists, it should be noted, including Bloomberg Economics, including Oxford Economics, are saying you could avoid that instability if you just created a bigger buffer of £50 billion. The hole to plug is 22, but you could go even further and go to 50 billion, reduce that instability, and if you don't, you'd be in Groundhog Day like we are now in this doom loop, as some would say. The thing is, it's easy for economists to say this. Politically, that is going to be incredibly difficult. We know that Starmer is weak. Personally, politically, we know that the left of the party don't want these spending cuts, especially when it comes to welfare. They've already been defeated on that. And as you say, Reeves told me herself she doesn't want to break the manifesto pledges to not raise the three main levers of tax. She doesn't want to raise a wealth tax either. And so creating this chunky buffer is a very, very tall order when Reeves has boxed herself in like this.
Lizzie Burden, thank you very much indeed. Anchor, of course, opening trade and covering the UK for us on that need for a £50 billion buffer. Let's see if the Chancellor comes through with it and what measures she will take, of course, in that budget towards the end of November. Now to some of the stories making the news this Thursday. President Trump says India has promised to stop buying Russian oil, signalling a possible resolution to an issue at the centre of the rift between Washington and New Delhi. Trump said Prime Minister Narendra Modi made the commitment to him during a conversation on Wednesday.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will. Within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
The US president has also confirmed a report that he's authorized the CIA to take covert action in Venezuela. He says the aim is to stem what he describes as the flow of drugs and illegal migrants into the US. Donald Trump was responding to questions about a New York Times report which says the agency would be able to carry out lethal operations in Venezuela. And Canada has threatened to take legal action against Stellantis after it cancelled plans to manufacture Jeeps in Ontario. Instead, the car maker is moving production of the Compass SUV to Illinois. It's promised to invest $13 billion in the US over the next 4 years, partly to mitigate tariff costs. Coming up, private markets hit back. We'll have more on the war of words that's erupted over Jamie Dimon's warning of cockroaches in the credit markets. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Wall Street's trading desks have had their best third quarter in years, fueled by the market's rally. Morgan Stanley led the pack, posting $4.1 billion in equities revenue. That's its best third quarter ever. Altogether, the 6 biggest US banks earned $15.4 billion from stock trading, up sharply from last year as the S&P 500 surged more than 30% since April on tech and AI optimism. And a war of words has erupted over whether banks and private credit firms are better equipped to handle a broader downturn. Blue Owl Capital boss Mark Lipschultz had these choice words for Jamie Dimon after the JPMorgan Chase CEO suggested private credit firms are more vulnerable to, quote, cockroaches.
I guess he's saying there might be a lot more cockroaches at JPMorgan, or I'm not sure I know what he's saying. I mean, it's not a private credit issue. I mean, it's a liquid credit market.
Well, staying with that story, JPMorgan says it's being a lot more cautious on credit after seeing indicators of late cycle behavior among corporate borrowers. Speaking exclusively to Bloomberg, the go-head of JPMorgan's commercial and investment bank told us high equity valuations and tight credit spreads could be causes for concern.
Jamie, I think when he refers to cockroaches, I mean, he can speak for himself, but he's really trying to keep us and everyone else on their toes. And you're starting to see things that feel late cycle. And I would feel quite strongly that we're in the latter innings of a credit cycle. The problem when being in the latter innings, you don't know if you're in the 6th inning or the 9th inning, and no one will ever know until afterwards. So, you know, equity valuations are very high. Credit spreads are very tight. You're starting to see things that Jamie was referring to. I mean, whether it's fraud or whatever it ends up being, but significant cracks in certain businesses and business models all make you nervous. So while it could last certainly for another 6 or 12 months, we're just being a lot more cautious in how we think about credit.
What does that mean? I know that there were bigger loan loss provisions that were set aside, but is it also in terms of tightening lending standards as well?
I mean, we've always been very disciplined at JPMorgan. We always evaluate every deal on a standalone basis. And we're just making sure that we're sticking to what is our core credit philosophy, being very disciplined on the quality of the credit, the terms, the pricing. And I think as long as we continue to do that, we can be comfortable. We would hopefully avoid any very large missteps.
The go-head of JPMorgan's commercial investment bank speaking to Bloomberg. Meanwhile, Bloomberg has learned that billionaire Ken Griffin has told a conference that generative AI is not helping hedge funds produce market-beating returns and isn't meaningfully impacting the industry so far. He says the tech hasn't replaced the research done at his firm Citadel, and while it's useful for enhancing productivity, for uncovering alpha, he says, quote, it just falls short. And Bloomberg understands that a potentially catastrophic breach of a major US-based cybersecurity provider has been blamed on state-backed hackers from China. F5, widely used by Fortune 500 companies and government agencies, disclosed in a regulatory filing that nation-state hackers had breached its networks and gained long-term access to certain systems. China's foreign ministry didn't immediately respond to requests for comment. Coming up, a new approach to building high-performing AI agents. We're going to discuss that next with the co-founder and senior VP of Databricks. That's coming up. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia edge higher as investors turn their attention back to tech. We're going to bring you earnings from TSMC, the world's biggest contract chip maker, shortly. And President Trump declares the US and China are in a trade war. But the Treasury Secretary says the 90-day truce could be extended. Plus, budget black hole. The UK Chancellor has warned she will need a £50 billion fiscal buffer for a better-than-evens chance of avoiding more tax rises and spending cuts in future years. We mentioned TSMC, the redhead crossing the terminal right now. TSMC's third quarter net income coming in at a solid beat, 452 billion Taiwanese dollars. The estimates had been for just over 400 billion Taiwanese dollars. This is for the third quarter. The gross margin in that period for this key foundry coming in above estimates as well, and comfortably so. 59.5% is the gross margin in the third quarter for TSMC. The estimates had been for 57%. In terms of net income, it is a beat as well. As I've mentioned, we are watching for further lines, of course, in terms of the AI demand picture. TSMC, of course, the key manufacturer of chips for the likes of NVIDIA, AMD and Apple. Net income is a beat. So a pretty solid beat for this Taiwan-based foundry. So crucial, of course, to the build-out of semiconductors and AI accelerators. And we saw the optimism coming through from ASML yesterday, which, of course, ships those extreme ultraviolet lithography machines into the foundries of TSMC. So watch ASML for a read across as well. The gains came through for that company yesterday. Pernod Ricard, meanwhile, in a very different space with a focus, of course, on high-end drinks. First quarter organic sales missing estimates for this French company. There is weakness in the China market for Pernod Ricard. Sales coming in at 2.38 billion in terms of first quarter sales, essentially in line with the estimates. But what you're seeing in terms of organic sales is a contraction. Organic sales contracting 8%. Estimates had been for a contraction of 7%. Softness in the Chinese market. So watch Pernod Ricard at the open in an hour and a half's time. Let's get to the broader market check right now. There is that volatility in terms of the US-China trade dimension that investors, of course, are having to get their heads around, and mixed messages from the Trump administration. European futures down 0.3%. So pairing some of the gains that came through yesterday. It was a pretty decent session yesterday for European stocks. FTSE 100 futures also off by 0.3%. S&P evening are flat. Nasdaq 100 futures pointing to gains of 40 points. Let's flip the board and have a look cross-asset with a particular lens on treasuries, with options traders now pricing in increased odds of a 50 basis point cut from the Federal Reserve. 4.02 right now on the benchmark 10-year. Euro-dollar at 116. Slightly stronger again for the single currency. 3 straight days of losses for the dollar. 4,205 for gold. Now unchanged. It had broken above a fresh record high earlier in the session. And oil prices are higher, up 0.7% as President Trump says India will be curbing its purchases of Russian oil. Let's get back to the tech story right now, because Nscale, the British neo cloud company, has struck another deal with Microsoft, agreeing to build a data center in Texas as the tech giant looks to make up for a shortage of computing capacity. In the latest in a series of deals, the British startup would deploy around 104,000 new NVIDIA chips in the American facility that will open in the third quarter of 2026. There's also a partnership involving a centre and data centre in Portugal as well. Nscale's Chief Commercial Officer, Karl Havard, is with me now. Karl, good morning. Thanks for joining us again. I mean, the deals are coming thick and fast for you and the team. I'm not sure how you managed to get any sleep. How significant are these latest tie-ups?
Well, I mean, it's great. Well, good to speak to you again, Tom. I just wish you were slightly later in the day, but yeah, no, it's exciting time for us. And Yeah, this deal is significant, as you quite rightly pointed out, and a real vote of confidence, I think, in a UK organisation as well. So we're delighted with the scope of what it is today and where it could go in the future.
Yeah. So, Karl, you're proving you're able to get these deals across the line, that you have the backing of the likes of Microsoft, Nvidia, and OpenAI. What are the biggest headwinds right now to the build-out? Is it labour? Is it supply chains? Is it chips? Is it energy? What for you is the number one factor that you have to kind of work through to get operations online?
Yeah, it's a great question. I think it's a dynamic supply chain, and it's different today as it was compared to, say, 18 months ago. So I think the number one, if I was to answer that question, even though there are many factors, would be the source of energy and the locations where to deploy. And hence, as you quite rightly point out, of the 200,000 GPUs, we've picked 4 locations. And, half of the deployment will go into Texas, then we have Portugal, then we have Loughton in the UK, and then Narvik in Norway. So we're always on the lookout for great sources of energy, for great locations. And, of course, you can imagine Microsoft don't pick any partner to work with. They have to actually have a lot of due diligence on who they select and those that actually build the right spec of data center for them. So we're delighted that they did select us. But we also recognize that there's a lot of hard work ahead of us. So, yeah.
Karl, I mean, you have that renewable component certainly in Norway, where I believe it's 100% renewable, but you can correct me on that. Do we assume, though, broadly that energy prices, that our own energy prices will go up as the data center build continues? And we've got some evidence of that already in the US.
I think, we've in our Norwegian facility, put it this way, we have some really strong power agreements in place, which allow us to be very competitive when it comes to the supply of AI infrastructure because of those agreements. That and those agreements are over a number of years. So we're trying to take out the volatility in that part of the supply chain. So wherever we decide to locate, and we will always try to get a long-term agreement on the energy price, which ideally, a little bit like a mortgage potentially tracker, that as energy prices would go down, then we would follow that as well, but we would cap it as best as we possibly could.
When it comes to the neo cloud space, I mean, there's a number of different players now, Karl. Do you expect to see consolidation when it comes to neo clouds, and will Nscale be playing a role there?
Well, I hope so. I mean, I'd like to see us be a long-term player, but the NeoCloud label, a single label, actually applies to sort of different business models that have brought AI infrastructure to the market. So there's some organizations, NeoClouds, that have said, we'll build it and they will come. And interestingly, in some areas, that's not playing out. What we've done and what our business model is we've looked for long-term agreements in order that we can sustain our future for 3 to 5 years in advance. So the agreements we strike are underwriting the infrastructure, and therefore we have that assurance that the revenue will be with us for at least 5 years, and then during that period, we can probably do a tech refresh or expand accordingly. So yeah, I think there are different models. It's interesting how the neo cloud market will shake out. As I said, some have approached it in different ways, but we've done it in a way which hopefully will give us that longevity going forward. In fact, we're confident it will do anyway. So yeah.
OK, Karl, we appreciate your time, and thanks for getting up bright and early for us once again. Karl Havard, Chief Commercial Officer at Nscale, on the back of that deal with Microsoft. Karl, thank you. Now, sticking with tech, an AI data and analytics platform, Databricks, accelerating its strategy as it kicks off the AI World Tour, its AI World Tour, at least here in London today. Arsalan Tavakoli-Shiraji is the company's co-founder and senior VP as well. Joining me now in the studio, senior VP for field engineering. Hey, thanks for coming to the studio. Again, also bright and early for you as well. So you're on this AI World Tour. Yeah. What does that mean? What kind of conversations are you having? What is the importance of this?
Well, first off, thanks for having me this morning. So yeah, we have this World Tour. We have our flagship conference in basically San Francisco in June, and then there's so much interest that we basically to go on this world tour to many countries across the world, many of them being in Europe. And honestly, we have a lot of these organizations and enterprises who are like, AI is the answer. I'm interested in AI. how do I actually get it to work? How do I get it to be successful? And they're eager to hear about how can we help with that? How can you get these, kind of AI agents in production? And what are others doing, right? So they can learn from the successes and failures of others. So just excited to be here and to meet with many of those customers as well.
And I think in terms of size and scale for our European audience, if they hadn't heard of Databricks, the valuation's at $100 billion US dollars. Your customers include about 60% of Fortune 500 companies. You've got partnerships with the likes of Microsoft and Google and Anthropic, and you're backed by the likes of Andreessen Horowitz. So that's the kind of pedigree that we're talking about. In terms of that demand picture, at a time when there are all sorts of questions about the AI bubble, are you seeing any slowdown in terms of the demand around implementing your kind of solutions across the data stack of enterprise? Is there any sense of caution, any sense of pushback, any sense of questioning this at this point?
Yeah, so look, it's interesting. I always get asked this question: is AI transformative or is it overhyped?
Yeah.
And the answer to that is yes, right? And so
on both fronts.
Yeah, on both fronts, right? So look, I think whenever you have newer technologies, you have this case where the answer to any question is going to be AI, and I think people are still trying to figure out how do we do it in a very high quality way that can impact the business. We've been fortunate where our focus has always been, rather than just hype, how do we help people move things into production in a way that can transform their business? And as a result of that, we have, as part of some of those financials we've announced, we have over $1 billion in AI revenue run rates, right? So people are absolutely using it in production at scale. And for many of them, our main focus is you have folks where just using AI is the goal, which doesn't make sense to me. The goal is, what is the business problem you're trying to drive? How do you use AI to deliver that outcome? So we spend a lot of time figuring out what's that business outcome for those customers. And you see organizations like in Europe, whether it's like Heathrow Airports or Virgin Atlantic, Flow Health, Adidas, all of them are using AI and analytics to actually transform the business. And AI is a means for getting there, not the exciting part. Oftentimes we focus on what we call boring AI, which is not the exciting things, but it drives real meaningful business output.
Where are European enterprises in terms of adopting and integrating AI solutions? Are they behind the curve? Are they playing catch up with their US counterparts? Are they slower to adopt?
I don't think that that's the case, right? I think a lot of times people ask, well, from a European side, as everybody keeps reminding me, Europe's not a country. It's a continent. So it's kind of different across the different points. There's obviously a lot of look and focus on how do we think about quality? How do we think about regulatory reasons? And so I think that caution, makes sense. And so again, a lot of our focus is not on how do you basically just deploy AI? But a lot of people ask us, how do we care about quality? How do we care about bias? How do we care about things that can move the business? And frankly, we've seen kind of a similar uptake and leverage by many of those organizations I mentioned and many more in Europe. So no, I don't view it as being behind on the AI curve.
You've got a relatively new product called Agent Bricks.
Yes.
So agentic AI built on data stacks of enterprise. What does that look like, and how does that story evolve? How significant does that become for Databricks and the companies that you're supporting?
Sure. Right. So on the AI side, I think many people's initial introduction to AI is more on the consumer side, right? So everybody knows about, say, a chat GPT or the like. And I think in the consumer world, you're answering more general questions. In enterprises, they really care about things that make sense for their domain, right? And so it means that your AI needs to be tailored to understand your data of your enterprise. And the main challenge that many organizations have is you have a choice between, I can put out like a toy example that sounds good, it's fun, I can do the Monday morning demo, but it's not really moving the business. Or I'm trying to basically put together this complex Byzantine labyrinth of technologies to deliver something. And usually when you hear them, they say, it takes me a long time to put it out. When I do, the quality isn't where it needs to be, and I can't get into production. And so what Agent Bricks says is, we've been doing AI now. I know it's in vogue now, but we've been doing it for over a decade. And we have a large research team that's figuring out how do we deliver production AI for the enterprise. And so what Agent Bricks says is, what if I can give you somewhere in the middle? You come in and tell me what is the business problem you want to solve, and then underneath, I can actually optimize it and deliver something high quality. So as I said, we have many organizations that when you ask them what was the value of Agent Bricks, they said much higher quality and accuracy, which means they can use it in practice, and they were able to deliver it in production far faster than they were previously. And by the way, they were able to do it without necessarily needing myriads of low-level PhDs who understand everything about AI.
Before I let you go, are we at a tipping point when it comes to that investment on AI and the return on investment? And if not now, then when do enterprises and your corporates and your clients start to see real ROI on the back of some of these investments?
So we are starting to see real ROI, but I think what you've started to see is that change for where everybody's answer is. You'll walk into somebody and they will proudly beat their chest and say, look at all these AI use cases you have, to now, the CFOs and the CIOs are like, what are the business outcomes we can drive? I think you're starting to see that, hey, I have a fear of missing out piece die down. We're still in the early days, but absolutely seeing AI drive real changes in productivity and business outcomes, and I think we're just getting started.
Arsalan, thank you very much.
Thanks for having me.
Coming into the studio, of course. Arsalan Tavakoli-Shiraji, who is the co-founder and senior vice president of Databricks. Now, to the investment firm Ardian, which has raised $50 billion for its flagship infrastructure platform, which is set to invest predominantly in Europe. The fund is 90% bigger than its predecessor, demonstrating the strength of investor appetite for Europe. There was particular interest from Asia, which accounted for 32% of the capital raised. Ardian's head of infrastructure, Matthias Berghardt, will be on the opening trade at 8:30 a.m. London time, so stay tuned for that interview. Meanwhile, Ferrari's CEO says the company's earnings projections are, quote, ambitious. Speaking on Bloomberg TV, Benedetto Vigna also discussed the company's first all-electric vehicle, Electrica, and how the EV slowdown is impacting the company's product plans.
The reason why we trimmed down the split of the 20% of the offer is because we have seen what is happening around us. So we pushed the number of models overall has been increased overall.
And the BYD Executive Vice President, Stella Lee, will be speaking with Bloomberg's Jennifer Dabasaja about the company's expansion plans. So staying on the auto space, catch that interview at 8:45 a.m. London time. A really interesting voice on Chinese auto expansion, particularly into those emerging markets and Europe. Coming up, we're going to dig into those earnings, meanwhile, from the world's biggest contract shipmaker, TSMC. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Recapping briefly the results we've had from TSMC, of course, the world's largest foundry and producer of semiconductors, posting a better than anticipated 39% jump in quarterly profit. Let's get the reaction and context and bring in Bloomberg's Jane Lanhee Lee with some details. Jane, what stood out to you and the team from these numbers from TSMC? It seems to confirm the AI trade remains.
Yeah, absolutely. I mean, the numbers are really astonishing. Who would have, I mean, all of the AI, I guess I should call it hype, or the concern of a bubble, is clearly reflected in these beats. The net profit was much bigger than expected. Even the gross margin was nearly 60%. And that's a huge gross margin when you think about all of the investments of the expensive ASML EUV equipment and things that need to go in to make these tiny chips. It's quite an impressive gross margin today.
OK, so the gross margin stands out. To your point, they have to spend to meet that demand. Is there any sense at all that what are we hearing and what are the numbers suggesting about the demand going forward for TSMC and whether or not this kind of growth is going to be sustained?
I mean, that's really questionable, right? And at 2 o'clock in just a few minutes here, the earnings call will start and we'll be getting the fourth quarter, so the current quarter outlook for what those numbers will be. If the current sentiment of investment and into AI data centers is any indication, I'm betting that those numbers are also going to be quite spectacular. How long this lasts, that's the big question. We're not going to get next year figures, which I think a lot of investors are quite curious about. But this AI boom has already last year it was pretty hot and it continues. I thought at some point it would slow down, but it's just ramping up. So it's very curious. Maybe concerning, we'll see, but the numbers are definitely much, much better than even expected.
What about, Jane, what about the geopolitical and trade tensions and to what extent that could become, I mean, if it's not a headwind for them now, does it become a headwind for them in the future, potentially?
I mean, that's a good question. There have been suggestions that TSMC should be making more of their chips in the U.S. Half of them being produced in the U.S. has been an idea floated. Taiwan immediately pushed back on that. About 76% of the sales of the current quarter or the third quarter does come from the U.S. That portion continues to rise. So the U.S. does have some leverage there, especially if it pushes tariffs. But manufacturing in the U.S., can you get that 60% margin? I mean, I think it's easy to say no. The labor costs are more expensive, materials are more expensive. The ecosystem, which is super efficient here, built up in Taiwan over decades, is not there. So the more you produce in the U.S., the less you're likely to see beautiful gross margin numbers like we see today.
Okay. Interesting context. Jane Lanhee-Lee, thank you very much indeed for that update with the TSMC numbers crossing a little under 15 minutes ago or so. And we wait to hear from executives, of course, to round out the picture on the back of those very strong results. You can follow analysis and expert commentary, of course, on TSMC's latest numbers on the Terminal live blog. It's at TLive Go on the Terminal. There's a lot more coming up. Stay with us. This is Bloomberg.
Looking ahead, however, layoffs and reduction in hiring plans due to AI use are expected to increase from everything I hear, especially for workers with a college degree. It's that disruption of expertise, and a college degree is a form of expertise.
Fed Governor Chris Waller speaking there. We're going to be hearing from some other Fed officials as well later today, so we'll see what they have to say as we have this essential data blackout and how people are starting to think about where the Fed goes from here. In the options markets, of course, in the overnight rate, we are seeing a build-out of positions for a 50 basis point cut, a ramped-up view there in terms of how aggressive the Fed could be as the labour market is looking, at least to some, a little bit more concerning. Here's the action when it comes to the 2-year and the money that moved into that with yields down, of course. You have the 10-year still hovering and holding above that 4% level, but the 2-year has done a lot of work in terms of yields lower. So at what point does that become something of a floor? 3.5 approximately at the front end. How much is priced in as we look at markets betting that you get another full 1% of cuts between around now and this time next year? Let's flip the board and have a look at what this is all doing to the small caps trade, because, of course, that underperformance for the Russell 2000, the small caps in the US, has been there versus the S&P. But, in fact, they've had their best week since late 2024. Are we starting to see a bottom now for the small caps stateside? And to what extent will further rate cuts from the Fed be supportive to that narrative? Let's flip the board and have a look at gold as well. That ties in as well to lower rates being supportive for the yellow metal. But really, this is a focus on the ETF flows into the gold space. Fresh record highs once again for the yellow metal today. It's up 60% year to date. And the ETF flows have been a significant factor in terms of underpinning that rally in gold, with forecasts from some that you could get to 5,000 by next year. Now, the Canadian Prime Minister, Mark Carney, is the first guest on the Michelle Hussein Show, a new Bloomberg podcast, which launches tomorrow. Meanwhile, the opening trade is up next. Stay with us for that. This is Bloomberg.